also had like displacement to the upside. It also broke the structure. But remember what I said in terms of inducement earlier on. Okay, so like look at the market structure, right? The market changes character, breaks structure, what's sitting below this low, liquidity, and why even more so? Because there's imbalance with an order block that's sitting there. Okay, so yes, if they wanted to, they could respect this order block if they had enough liquidity. But the fact that there's imbalance resting below it, guys, there is liquidity laying in this imbalance. This is internal liquidity. Okay, so now we're going to go and we're going to play it out and we're going to see how does the market react at this point. So let's go, maybe let's stay on 1 hour. That's fine. We can stay on 1 hour and let's play the market out. Okay, so let's see what happens at the first point. Let's maybe do it a little bit slower. Okay, I could put it back faster.
Sorry, Ali.
Yes.
So is it possible at the first order block that it might give a reaction, but not the kind of reaction we want?
Oh, I don't know why did it just stop like that. Okay, let's do it again. Okay, so look at the reaction it gives you. It gives you the reaction, right? Ah, and now it doesn't want to stop. Okay, so it gives you the reaction off of that first order block. Okay, but now, guys, this is where you have to use logic, right? Because what is the high that created this low, right? It's all the way up here. So in order for us to even see a change of character, it's like a massive push to the upside, right? Now, what you'll notice is whenever the market is about to shift and in terms of change its character, right, it usually will get smaller and smaller and smaller with its range. So the breaks of structures to the downside will become smaller and smaller before the change of structure happens to the upside. Okay, so look how the market gets buyers involved in order to then liquidate them, come into this imbalance, mitigate our order block, and then all of a sudden the market goes. Okay, you can see how the market has a big displacement to the upside, now changing character. Okay, and you can see it even break structure again to the upside. So now the market has just showed us how they've come to close their sell positions. This is where they close their sell positions. Okay, they closed their sell positions and then they continued with their buy positions. And the market is now trading in their direction.
Quick one, please.
Okay, look what the market does again. Okay, look what the market does again. Market creates liquidity, inducement lows, liquidated, back to the order block, which was the last down candle before the up move that broke structure. Okay, so let's just move this imbalance for now. The last down candle before the up move that broke structure created displacement. The market comes back to mitigate that, and then the market leaves. Okay, you guys with me?
Yes.
Yes, thank you.
Sure.
Yes.
Okay, so now we can understand also which order blocks are the ones that are going to hold and which ones aren't going to hold. Because some people are going to look at this like this and they're going to say, right, here was the last down candle before the up move that broke structure. And yes, this is going to give you, if we just do it like this. Okay, if we're just looking at this last down candle, if we just look at it like this, it gives you an immediate response off of that, right? So it gives you a trade, okay? But look how it comes to liquidate that position, okay? So it can give you the movements off of order blocks within your range, but the ones that are most powerful are your extreme order blocks. Okay, so in other words, the ones that are sitting at the lows or at the highs, the ones that help to create the shift in the market structure. Let me just check the chat. Leaves with momentum. Okay, so when we enter off of order blocks, okay, there's two ways to go about it. Okay, so number one, you enter off of 50% of the order block or off of the open of the order block. Okay, so if we go and we look at this order block again here. Okay, if we look at this order block over here. Now, some people like to just look at the body like this. Okay, personally, I like to highlight the whole thing with the wick. Okay, because within the wick, there can be, obviously on a smaller time frame, there can be bodies. Okay, so there is orders that are sitting in that wick, although the strong orders are sitting in the middle of this body. So 50% of the order block, if we lay out a line, 50% of this order block, okay, is most likely where they like to come and mitigate their position. So close these cells in this order block. Okay, but sometimes they leave off of just tapping the wick. Okay, so if we go and we have a look, sometimes they tap into 50% and sometimes they tap into just the top half. Okay, now you can see they were just shy of the 50% there. Okay, it might have been my measurements, but we can just double check. Okay, my measurements were pretty good. Okay, so they were just shy of the 50%. So remember, they also know that smart money traders understand that the algorithm comes to 50% of the order block. So instead of entering at 50% of the order block, you can look to enter between the open and the 50%. Even if you chose 50% of that level, okay, that's where you would enter your position. Now, remember, like I said, there's always risk entries within confirmations, and then there's confirmations within confirmations. Okay, so if you had just placed a buy limit at this point, you would have had to place your buy limit and your stop loss would have had to sit below this order block. Okay, now if 65 pips is too big of a stop loss for you, you can't enter using that strategy. Okay, so this is the way that you would enter your trade, right? Now, obviously, speaking in terms of structure, this would be your first take profit, second take profit, etc., right? But because we saw this trade on the higher time frame, understanding that we had a change of character on our daily time frame, where would we be expecting to hold this buy until? Right? Where would we be expecting to hold that buy, that type of buy? Where would we be expecting to hold it?
I think until premium or
Into
the
premium,
high.
right? Yeah,
Yes.
into premium, right? Because we've had our change of character and now the market has given us an opportunity to get involved. So the first take profit, even on the daily, would be up top here at this previous high where we could see some resistance coming down again. Okay, but now if we go back to that 1 hour time frame, notice how the market gives you an opportunity to enter, minimizing that risk. Okay, so now instead of just entering off of your order block, like we spoke about the risk entry, okay, we've now got a change of character followed by a break of structure, liquidity to be targeted, order block sitting below it. Okay, and if we look at a different time frame, let's have a look at a different time frame. So let me just take this back. Okay, let's go 2 hour, or let's go maybe 15 minutes. Let's go 30 minutes. Okay, I want to see if there's any clear imbalance sitting straight over there. Okay, even on the 5 minutes, it's been closed. Okay, imbalance was closed there. Okay, over here, can you see here there was a little bit of imbalance here? So we'll just mark this out over here, right? Just as a matter of interest. Okay. And if we go to, oh, it won't let me go to 1 minute. Sorry, man, guys. But essentially all I wanted to show you there was if you needed to get a tighter entry, right? You could have waited for the actual respect of the new order block formed. Okay. So now we have a look. We've got our order block that gets formed. And when you enter your trade off of, let's say 50% of that order block, okay, you would enter your trade maybe around, let's go, maybe around that level, okay, or even over there to be safe, okay. And you can see how the market would then allow you to put your stop loss below that order block. And now you would target the highs. Okay, and remember that imbalance that I drew out on a smaller time frame. Let me take this away so you can see it clearly. Look how the market came to that imbalance, filled that imbalance, and then pushed up. You guys with me? Making sense?
Yes.
Okay.
Ali,
Yes.
sorry, man. I just want to ask that
Yeah.
order block that you marked out, and then it had probably 10 small candles afterwards. I'm confused, why exactly that would be your order block.
Okay, because it's the very last down candle. And the reason why is because it created the displacement. So as long as the displacement gets created with a break of structure, you use the very, very last down candle.
Okay, so the displacement doesn't have to come immediately after.
No, because then, like we said, this would have then been an order block, right? We would
Yeah.
have said, yeah, and that's why then we could have, just like what we looked on to the left-hand side, look how this happens again. We have this down candle before the move to the upside. It has an engulfing and then it induces and then liquidates. But if we look
Gotcha.
at the very last down candle, like we highlighted over here, then we would be in the World Cup catching our trade off of that. So
Okay,
as
cool,
long
got
as it's got the displacement and it's got the break of structure in that direction, then you are all set to go on the last down candle or the last
Thanks,
down
Ed.
candle. Sure,
Sorry,
my
Ali.
pleasure. No worries, go for it.
I wanted to know if after that time when it market when price came into the order block and it went up, gave us a change of character, right?
Mm-hmm.
And it retested,
Yes.
then it gave us a break of structure. So if the market didn't when it retraced again, didn't create those equal lows, would you have expected the market to continue going up?
If it didn't create these equal lows, yeah, sometimes, yeah, if it has enough momentum, it can leave without. It can leave without coming here. But you see now, this is where you must understand your lower time frame aligning with your higher time frame, right? Our higher time frame, like we saw to the left when we marked out these points of interest, right? We saw it created the order block. We saw how it created that imbalance. Now, when they come to close off that order block and they create a new order block, we must understand that they still want to mitigate it. So
Thank you.
yeah, as long as you see that that order block has been created, this is most likely going to happen over and over again. You will see liquidity generated, liquidate the liquidity, because this is where they're inducing early buyers. This is where the people that are thinking the market must move off of this order block over here or around this level over here are getting involved. They are waiting to catch the big trade. They want to get them out before the actual big trade happens. So most likely liquidity will be generated first before that actual move happens.
So, Ali, would this be the accumulation to advance?
Yes,
this pattern?
exactly. Exactly. Because remember, guys, okay, so let's take this one away now because we know this is where the inducement happened, right? And if we just look at it like this, right? All of this is accumulation. Accumulation. Okay. This is all accumulation. Now, remember the institutions that are actually giving a push in order for the retailers to feel that happy feeling over here. Okay. They are not worried about their stop losses. They have unlimited stop loss. So they don't care if they have a drawdown, remember. So they are involved here in order to psych you in. and they are involved here in order to psych you in. But they know that eventually the market is going to push in their direction. So that's exactly what would be created at accumulation in order to advance.
Ali,
Yes.
could we also say like this liquidity generation is because it didn't break that high to your left there, not the change of character? Yeah.
This one over here.
Yeah, because that's the
Yeah.
one that formed though.
Yeah, so exactly. So if this high over here was completely taken out, we could see a respect of a fractal low and a continuation. We could see that, yes. Okay.
Makes sense. Thank you.
Makes sense. Okay, cool. Order block, imbalance, and breaker block. Okay, we're still going to get into breaker blocks now. What makes OB more valid, such as it takes out more liquidity? Because remember, at an order block is where mitigation is occurring. Okay, so this is the mitigation of this last down selling pressure. Okay, so remember, like we spoke about in terms of the institutions getting involved at this down candle. Okay, let's just change this quickly to red. Okay, at this down candle, they are selling the market. So they are in drawdown. So why all of a sudden do they have this massive push to the upside? Because they've come and they've closed that position, and then they're continuing with that position of their buys at this last specific point. So that's what makes it so strong, because they are mitigating their positions. They are closing their sell positions there. Yes,
So,
I had
Ali,
another.
can I ask you something?
Sure.
So would you say if they leave an imbalance like on the order block that you have initially showed us, would you
Yes.
say, because now they've been leaving imbalances all over and then filling them up, which is mitigating. So now they've left that one without filling it up. Would you say they are still going to come back to it? They have to come back to it.
Which one now are you speaking of?
The one that
This-
you've showed us.
This
that
one over here.
Yeah, so they've left that one and then they kept on going up. So if you check the candle in the middle, yeah, just the
This one over
second
here.
from the, no, go up,
Yeah.
up. Yeah, that one. They've left a gap in between, right?
Yes.
So I would say there's an imbalance there, but now
Yes.
they've mitigated that imbalance and then went up. But now,
But they failed to go higher. They failed to take out the highs.
yeah, so they keep on leaving imbalances and filling them up, but left that
Yes.
one. So would you say, even though they keep on mitigating all those imbalances, they'll still come back to the one that they haven't mitigated?
Yes. So remember, it all has to be obviously in alignment with your market structure, right? But essentially what imbalance is, like we spoke about, it's unfair pricing, right? So the market's job is to create imbalance and then full imbalance, create imbalance, full imbalance. Okay, so essentially here they create this imbalance, they fill it, and then they move away. Okay, and then they create more imbalance, they fill 50% of it, and then they start to move away. Okay, and then they create, let's say, more imbalance. Okay, they fill it, and look what they decide to do. Move the opposite way. Okay, so it all is a game of demand and supply sitting at those levels. Okay, so if they don't have enough liquidity to push higher, they needed to come grab more liquidity that was still laying here below this wick in this imbalance. And if they still don't have enough liquidity to break highs, they will come to the one that they've left behind. So they will fill imbalance and then move away from it. And if market structure tells you that it's failing highs, it's going to come lower. If market structure tells you that it's taking out highs and respecting lows, it will continue higher. So market structure in combination with it will show you where they're going next.
So my question would be, they keep on mitigating all those imbalances, but they have left that one.
This
right?
one down
Saved
here,
it for-
yes.
Yeah, they saved it for the
They
future. So
mitigation.
they keep on mitigating every imbalances that they have been creating. But that
Yeah.
one is the last one to be filled. So my question
Exactly. Yeah.
so my question was, so they have left that one and keep on filling the other ones. But now
Mhm.
my question was, are they still going to come to it either way?
Yeah. Yes. So
Okay.
remember, market structure is going to tell us that. When they created these equal lows, it was a sign. When they started failing the high, it was a sign. Okay, they're failing the high. It was another sign. Be patient, be patient, be patient, be patient. They're coming. And then they finally came for it.
Okay,
That's where the
thank you.
patience comes in. My pleasure, no stress. Okay, so we've got order blocks, guys. We understand what an order block is. We understand how to identify it. We also understand where the
Ellen?
intuition is sitting. Yes. Yeah, go for it. So yeah, so my rule is like if I find an order block on, let's say, sorry, I'm
Just question.
I don't know if it's just me, guys, or if you guys can't hear this person speaking.
I can't also hear.
No, I
Okay.
couldn't hear Ali.
Okay, cool, thanks. Okay, so let me just answer Adrian's question. Okay,
Can
so
I ask something?
yeah, just give me a second to answer that question. Okay, so essentially, if the market has given me an order block on like a daily, okay, I don't like to go lower than an hour for my order block. Okay, I don't like to go lower than an hour, because if you go lower than an hour, you might over refine and then you end up missing the trade. Okay, so you don't want to miss the trade, right? So it depends on what time frame do you find it. If you find the order block on the daily time frame and then you end up refining, don't go lower than an hour. Okay, if you find your order block on let's say a 1 hour, you can refine up to a 5 minute. Okay, but if you on a daily time frame, a 1 hour is the maximum that you want to refine. No stress, no stress. Sorry, somebody else had a question before I move on.
So I just wanted to ask that, what if there are maybe like 5 candles after the order block? What's happening?
Okay, so over here, like for example, this one, right? We had a few candles happening.
Is
Yeah, so all they're doing there is they just basically putting in their orders. Okay, they're just putting in their orders. So the fact that they've got multiple little candles happening like this is like a, how can I call it, a decisional phase. Okay, so they're like deciding, well, not deciding, but they have decided, but there are lots of institutions' prices being triggered in here. So there's lots of them that are getting involved, and that's what causes also the market to create these little spinning tops and doji-looking candles, because it's like a decisional phase. They are putting in their orders. So, but like I mentioned earlier, as long as you've got the displacement and as long as you have the break of structure, the last down candle is your order block.
okay. We will use the first 3 candlesticks.
These ones. Yeah, don't be concerned about them as long as you have this happening.
Okay.
Cool. Okay. Any last questions before I move on to breakers? I want to make sure everybody's cool,
Yeah.
and then we can move on to
Ali,
breakers. Yes.
I have a
can you
question.
please repeat what you said now? I was off a bit.
Okay, so all I said is if there's these little candles that follow the last down candle, don't be too concerned about them. As long as this move created displacement and it created the break of structure, your last down candle is your valid order block.
Thank you.
My pleasure.
Ali,
Yes.
with the order blocks, do we include the wicks wicks or is
Yes.
it just the bodies?
Yeah, you include the wicks. Okay, you can include the wicks. And usually, guys, you don't want to see like an order block where it's like, how can I need to show you an example. I need to show you like an example of what I'm talking about. You don't want to see like an order block that has like a very small body and very small wicks. You want to see like usually the body, there must be like some sort of a body in the order block, okay? Because remember, wicks are rejection and the body is the orders, okay? But when you mark out your order block, you mark out the wick to wick, because like I mentioned in the beginning, they can just tap the wick and they can go, okay? They can come into the body if they want to, but most likely, if you look at the top 50% of it, you won't miss your trade. Sometimes they might come into 50, they might even come to the very low. Like we saw here, they came quite close to the low, okay? But you don't want to end up missing that trade. So yeah, I highlight the whole thing personally. All right, cool. We are going to move on to Euro USD, and I'm reading the comments. We're going to move on to breaker blocks, okay? Let me take a picture of this for you guys, then you guys can keep this as a note. Okay.
Please label it. Thank you.
Oh, sure. Okay. So we'll just go change of character. This was then followed by a break of structure, which was our confirm chalk. And then we've got our last down candle, which is our order block. Okay. Which tapped into a higher time frame order block. Okay. And then, like we said, this was liquidity. And this is what we call mitigation. Okay. Cool. Hopefully that makes sense to
Ali?
everybody. Yes.
I see the after the change of character, that confirmed change of character is most the break of structure that comes before the change of character.
Yeah.
Okay.
So this would just be your break of structure. So we can even just go like break of structure, but in other words, we know that means it's a confirmed change of character.
Okay, thank you.
Sure. Okay, cool. We're gonna jump onto breakers quick, guys.
And just a quick
Yes.
question. I see that or earlier you guys mentioned that the sweep of that liquidity, the high there on top. So it means once we sweep and we don't close completely, it means that we're coming back for discount, or we're coming back to the session zone.
Yeah, it basically
I
means
see it
that
happens a lot.
it happens a lot. Yeah. So if we sweep and exactly like we have this close, right? The market closes like that, right? And then it's basically telling us we need more liquidity. So it's going to go seek liquidity at imbalance or at lows, and it's going to look for that liquidity to see if it can drive price higher. If it can't drive price higher, it's going to come to the last possible point that it can grab all the liquidity that it can in order to then drive price higher.
Okay.
Okay. Cool. Okay. So I'll keep that as a note. I will share that with you guys. Let's jump onto breakers quickly. Okay, sweet. Okay, so when we talk about breakers, right? Now, they're just a little bit different from order blocks. And the difference between breaker blocks and order blocks, okay, so as you noticed, when we look at an order block, it's the opposite color as to what we are getting involved. Okay, so in other words, when we looked at a bullish order block, it was a bearish candle that was a bullish order block, right? So it was a bearish candle where we were looking to buy. Whereas a breaker block, if it's a bullish color, you are looking to buy. If it is a bearish color, you are looking to sell. Okay, so that's how you can easily identify the difference between order blocks and breaker blocks. Okay, now when we speak of breaker blocks, what makes it a breaker block? Okay, so if the market, let's say for example, the market drives lower and then all of a sudden drives higher. Okay, now this can come in forms of like it could have taken liquidity below this low, and then all of a sudden the market had enough momentum to drive higher. Okay, so what's going to happen is at this level, right, we would see an up candle form. Okay, so this would be an up candle that forms. So that would be the last up candle before a downward move, okay? And then the market broke structure back to the upside. Okay, so this downward move doesn't have to take out this low. It can just grab liquidity, okay? Most importantly, what's important is that it has to break structure back above this candle. That is what makes this a breaker block. Okay, so now what we look at is this being a pivotal point for the market to shift. And push higher. Okay, so breaker blocks, bullish breaker. The last up candle before a down move that broke, that then broke structure to the upside. Okay.
Sorry, Ali.
Yeah.
When you're done explaining, can you please go to German 30? I want to ask you something related to this.
Okay, just give me a second. We're going to get involved in this first, then we'll have a look at that afterwards. Okay. All right. When it comes to a bearish one, it's going to be the last down candle before a up move that then broke structure to the downside. Okay. Let's do it like this. All right. So for a bearish one, we would have the last down candle before an up move. Okay, that then broke structure to the downside. Okay, so now this level becomes a pivotal point for them to basically continue the move. Okay, so it's